This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk and financial solutions.
Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Michael Goldberg, welcome back to Chris Judd's Talk Your Book. I think we've got an exciting stock to get into and talk about. I thought we might start with just talking through the Collins Street Value Fund in your 2019 performance.
Yeah, thanks for having me back, Chris. It's a pleasure to be here. We did really well. It was a bit of a pleasant surprise. The Mercer survey ranked us as number 4 of all Australian equity mandates in Australia for the last year, which is fantastic. We generated a gross return of around about 36%, which is amazing. I'm not promising our investors will do that again next year, but it's certainly nice to get some runs on the board, especially given that we've been sticking to our mandate, which is finding good quality value stocks, which has become increasingly difficult as the market's gotten expensive. So very pleased with how it went.
Congratulations. And what stock do you want to talk about today?
I thought we'd talk about Peninsula. It's a uranium stock that we've held for quite some time. It's listed in Australia, but its actual operations are over in the United States in Wyoming, which makes it especially interesting for us given the complexities of the space, but specifically given what's going on in the US at the moment.
So I thought maybe we'd start with the uranium market more broadly and get into the more granular aspects of Penn after that. How do you view the uranium market currently?
Look, it's a market that has massively long cycles. We've been in a downwards trend for quite some time, probably since Fukushima back in 2011. And what we've seen recently is that the actual spot price of uranium is trading at a significant discount to the cost of production. So if you wanted to put it in terms that perhaps more of your viewers might understand, imagine if a barrel of oil was trading at about $15 per barrel. That's unsustainable. What you'll find with the oil market is that sort of thing will fix itself up pretty quickly. But with uranium, given that it's such a highly regulated market, trading is less frequent. The spot price is also less frequently traded. And so things are driven by contracts, which takes a lot longer to play out.
So in the oil market, the price is below the cost of production. Production drops pretty quickly and the price quickly goes up.
Yep.
In a market like uranium, there's often contracts signed for 5 to 10 years at a time, so the spot price isn't as meaningful. Explain how that nuance works.
Yeah, look, I mean, the spot price is really not driven by the miners themselves. There's something called secondary producers, which essentially translates to this. So the uranium miners dig up the dirt, they take it to get processed. The processing plants run their machines for, let's call it, an hour. Whatever comes out is owned by the miner and they then on-sell that to the utilities. What the processors can then do is they can take the leftover feed and when they've got some downtime, they'll rerun it and they'll get more sellable material out of it, which they will then sell into the spot market. So their cost of production is exceptionally low because all they're doing is rerunning the dirt during the downtime. So they've sort of impacted the spot price quite significantly over the last few years, which has seen the spot price fall to as low as $18 in 2017. We've had a bit of a recovery. It's now at about $25. That's on the back of some of the world's largest producers cutting production by as much as 20%. But even still, $25 is a long way from the average cost of production globally, which sits at around about the $45 per pound.
And so the view more widely often in Australia is that nuclear power is inherently dangerous. Could you give a bit of colour around the new age nuclear reactors and how they differ to perhaps how people view the nuclear reactors from the past?
For sure, it's an interesting point. I think perhaps previous decision makers grew up in the era of the 3 Mile Island accident in the States, and probably our generation probably remember Chernobyl from growing up, and so there is an assumption that this market is especially dangerous. But if you think about it in the broader concept, you've had this industry running for 60 years. I read somewhere the other day that there's been 17,000 years worth of cumulative engineering knowledge on civil nuclear power stations. That's a long time to have only had really 3 accidents, being 3 Mile, Chernobyl, and more recently in Fukushima. I like to think of it in the following way. It's a bit of a sidestep, but if you imagine what technology was like 40 years ago. 40 years ago, no one could even imagine having home computers. In the 1980s, when you had Chernobyl, when you had those issues, we were still using those large floppy disks with, half a megabyte of data on it, which was amazing at the time. In the early or late 80s, early 90s, we transitioned to those, harder floppy disks with 1.5 megabytes, which at the time was stunning. You couldn't imagine it. And you fast forward to now, you've got the entire world's information, everything that's ever been thought of, anything that's ever been written, everything that you might ever want to know in your pocket. You've got your smartphone. Technology's moved on so far since the 1950s and 60s that it's almost silly to compare what's happened in the 60s and 80s and so on with today's technology. Today, the technology is so much more advanced that you're highly unlikely to see a modern-day nuclear reactor have the same sorts of troubles that you've seen back in the past. And
you've touched briefly on the supply side for the uranium market. Talk to me about the demand side, particularly coming out of China, and what you foresee to be going on there.
In general, if you ask most people in the street what proportion of the global electricity grid is run by uranium, they would massively underguess. Yeah. The States, 1 in 5 houses is powered by nuclear energy. In France, 80% of their grid is powered by nuclear energy. You've got about 1 in every 10 houses in the world that is fueled by nuclear energy. And that's not going away anytime soon, especially given our current focus on environmentally friendly energy. Nuclear energy is the only energy that can provide both base load and zero carbon emissions, which is obviously massive if we're moving towards a world with lower emissions. What we're seeing over the next 30 years or so is around about 3-4% growth in reactor demand. So in terms of utility demand, we've currently got about 450 uranium utilities around the world. We've got about 50 more currently in production and about 110 more that are going to come on in the future that we've already got plans for. So the growth over the next 30 years is around about 4%. If you just add on the current sites under production, that adds about 10 or 15%. So the growth in nuclear energy use looks to be pretty stable going forward into the future. And there has been some concerns. There were some whispers out of France that they were looking to take some sites offline, but that's been reversed, and there's no plans before, I think, 2035, before they have that conversation again.
And in terms of uranium usage, it's a huge amount they've got to purchase initially to get the reactor up and going. It's not sort of a steady stream of buying, so those new reactors are incredibly important. Is that right? That's
true as well. The other interesting fact is that from a pricing perspective, the actual cost of the underlying uranium only represents about 5 to 15% of the cost of producing a kilowatt of energy. Yeah, okay. So whether it's trading at $25 or whether it's trading at $75, it doesn't make a massive difference to the utilities.
So talk to us about Penn.
So Peninsula are listed in Australia, as I mentioned. Their operations are based out of Wyoming, which is in the United States. And the thing that attracts us to them, which is different to other uranium miners, is that they've got exposure to what was originally called Section 232, where the United States government were petitioned to implement quotas for the US uranium miners. Part of the issue there is they used to provide some 30 or 40% of US nuclear needs. It's now down to less than 1%. Back in 2014, the US miners produced some 5 million pounds worth of yellowcake. That in 2019 is down to around about 500,000 pounds of yellowcake. So the industry over there has really taken a big haircut. And especially given that the US has a big military budget, there were some concerns from a national security perspective that if they became reliant on outside sources to provide their energy, that could be an issue for them. So the Section 232 was taken to President Trump. He knocked that back. He didn't like the concept of quotas. Initially, they were purporting or presuming to implement 20 to 25% quotas so that utilities would have to source 20 to 25% of their needs from local producers. And instead, he set up a nuclear fuel working group. He said, guys, go away, come back to me with some ideas for how we can stabilise the market and reinvigorate the US uranium space. So the Nuclear Fuel Working Group came back to the President with their propositions, but it's not a proposition that's going to be made public. Instead, the government will sit on it, and when they decide what they want to do, they'll let the market know. My anticipation was that we would hear something about their proposals tonight Australian time, when Donald Trump provided the first part of his 2021 budget. But I'm told that there might have already been some articles suggesting that they've already implemented, or they have in fact announced some changes. The key one being that the government will now be buying $150 million worth of uranium per year, which comes to about 3 million pounds of uranium per year from US miners, which is a big deal. They're also going to do it at slightly above the cost of global production, taking out companies and miners that are supplemented by governments.
Right.
So what we expect is around about $50 per pound, which would be fantastic news for Peninsula, given that their current cost of production is about $40 and likely to fall to about $30 as they ramp up to stage 2 and stage 3 of their production.
Great. And Peninsula recently raised some money. Talk us through their debt and what their balance sheet looks like.
Yeah, so Peninsula don't actually have bank debt per se. What they had was some convertible note debt. They've renegotiated with those convertible note holders and they went to the market and raised some capital. They raised about $8 million. They've also decided to sell down some of their contract pricing. They're currently selling uranium at $50 under contract or $52 under contract. Obviously, given that the current spot price is about $25, that's a pretty valuable contract to have. So they've planned to sell down about $10 million worth of that. And when all is said and done, we'd expect that there'll be about $7 million worth of debt to friendly players once this washes through. So that's a pretty good position to be in.
And their capex, particularly for phase 1, looks pretty low?
It's exceptionally low. Yeah, so what Peninsula have been doing until now has been in situ recovery using an alkaline mixture. So what that basically means is you find a rock formation where you think there's going to be some uranium, you do some testing, you identify that there is in fact, you drill a deep hole, then you pour in this mixture, it breaks up the uranium from the rock formation, and then you essentially suck it out. So historically in the United States, they've used an alkaline mixture, and Peninsula have been using that for the longest time as well. But globally, the more popular way to approach it is not with an alkaline-based mixture, but instead a acid-based mixture. And I know when people think of acid, they think of all sorts of, terrible leaks. They think of Aliens, the movie, and whatnot. But when I spoke with Wayne, the CEO from the company, and he was explaining it to us, he said, think of lemon juice. It's essentially the strength of a lemon juice, which you pour down the hole, it breaks up the uranium from the rock formation, and then you suck it out. So where they're currently sitting is, they've got all of the infrastructure already in place, they've got all the holes already dug. To get through stage 1 under the new acid-based leaching process, all they need to do is change from alkaline-based to acid-based and change some of the rubbers and a little bit of the machinery. But broadly speaking, everything is already set up and ready to go under the new approach.
And there's not a really obvious institutional grade Australian uranium company. Obviously ERA's finishing up. You've got Paladin, which is probably the biggest, but then you've got Boss and Peninsula. Could you see a situation where there was a merger between a couple of these companies to create that obvious market leader in the Australian uranium space, or do you think, given the current climate, that's unlikely?
Look, I think in the short term it's probably unlikely. I think in the long term you probably will see something happen. What tends to happen is when a sector starts to do especially well and management are looking for places to allocate capital, you tend to see some corporate action. At the moment, I think everyone is just worrying about their own balance sheet, trying to survive until spot prices turn around and they become more profitable. I think as well, one of the challenges might be, although you might make a case that it adds to diversification, is that Paladin, as you mentioned, is based out of Africa, I believe. Boss, which is one of the big ones in Australia, great company, well priced, is based out of South Australia. And of course, Peninsula, which we're talking about, is based out of Wyoming in the United States. So there wouldn't be a lot of synergies in terms of combining their minds, but perhaps from a management perspective, perhaps from a cost base, there could be some synergies at some point in the future. I don't expect anything to happen in the near term, though.
Well, Michael Goldberg, thanks very much for coming back on Talk Your Book.
Thanks for having me, Chris.
Thanks, mate. This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients.